So as we do that, as we roll in here, we're building that community. So let's do it. What's up, everybody? Good afternoon, good morning, and good night, wherever you're at around the world. My name is Kelly Kellum. Welcome to the BitLab Academy daily live stream. Thank you for being here. We've got an incredible community we're building here. So please, if this is your first time, if this is your only time, if this is your last time, just being here, please hit that like button, hit that subscribe button, ding that bell. It's the easiest way you can help this channel, being a part of the Bit Squad or not. Here at BitLab Academy, we're all about bridging that data, bridging that gap from beginner to pro. If there's any issues with video or audio, let me know. Give me a thumbs up. Give me your favorite emoji in the chat. If everything looks good, it sounds good, feels good. If you're bullish, let me know you're bullish. Type in bullish. If you're bearish, let me know you're bearish. And the time frame I'm specifically talking about here is over the next week. Because one of the biggest issues when people talk about being bullish or bearish is one person might say they're bearish, another person says, well, how could you be bearish? It's so bullish right now. Well, the two people might be talking about two entirely different time frames. So you got to define your time frames not only in charts, but also in conversations so people know what you're talking about. So the markets have been, Bitcoin has been taking a little bit of a breather. It's pulling back a little bit. It's also sitting a bit stagnant, consolidating. Some people are taking profits while other buyers are coming in. We're finding that sort of middle ground right now, but we are seeing several altcoins rip, and that's what we're going to be talking about today, and how we can navigate that, how we can prepare for other coins that haven't ripped yet, and then, do we reallocate some of our funds from those profits? But with all that, again, my name's Kelly Kellum. Welcome here to the BitLab Academy daily live stream. We've been doing this for about two or 3 weeks now, really building a great community here. It's all about positivity, empowerment, encouragement, and we're breaking down, not only looking at the charts and looking at the news and looking at on-chain data as well as technical data, but we are trying to really bring the concepts forward as to how it is these professional traders like myself and Frankie Candles, CryptoFace, whoever you're watching trade, whoever you're learning from online, Crypto Zombie, Dan, Crypto Capital Venture, any of these folks. When you're watching these different YouTube streams and you're seeing them, work their magics on the charts and having consistently profitable trades, what are the concepts that are involved in order to do that profitably over time and doing it consistently? So we are going to be breaking down charts as I do in every stream, but we're also going to be breaking down and pulling forward some of the concepts, different concepts each day. And before we get going, again, hey man, we got to get those likes up. We got to hit those subscribes, ding those bells, help support this channel. And we're going to go ahead and dive in here and make sure if you're watching on any of the other streams, we have a 24/7 stream on Hit Network on YouTube. So make sure if you're watching there that you do come to all these socials down here. Make sure to go to BitLab Academy. And so we're just going to jump right into it. Make sure you're following the correct BitLab Academy, which is at Academy BitLab. It's the only one. And then make sure you're also coming over here and you're following the only real Twitter account of mine, which is right here at Kelly Kellum. That's Kellam, no space, no underscore. There's a lot of fakes out there. And we're going to be breaking down some of the stuff. And I regularly reference this chart as well as this market cycle trading cheat sheet as it relates to what's going on in the market. And before we jump into anything further, please come over and check out bitlabacademy.com. It's this month, guys. It's this month, man. We have been working so hard in this beautiful studio, as you see here. This beautiful studio that we've built, that we're doing all of the, 25 plus new courses, over 200 lessons. I'm filming, 4 to 9 lessons a day. Frankie Candles is in here. Ben Armstrong is in here. TJ both from BitBoy. We have guest experts. We're going to be having also, not only that, we're going to be having guest expert masterclasses within BitLab Academy as well. With all that, you also get access to the ridiculous, amazing Discord. That's included with the membership to BitLab Academy. Make sure you sign up here for the newsletter. I'll be sending another one out this week. And you also get entered to win free access to the courses and the indicators. And make sure, I will be referencing these, make sure you come over here and check out these indicators right here because there's some really great stuff in here. Some of the best data in the market we pull together for these indicators. And if you want to watch a little more basic stuff here, you can come to the basic trading suite tutorial. And with that, let's go ahead and jump in. How's everybody feeling? How you doing? Are you up? Are you down? Were you positioned? Were you positioned in any of these altcoins that have ripped without doing any leverage? Let me know. Let me know just a rough percentage if you are in any of these ones that have ripped, like the graph. Like, oh, I'm so upset about that. Remember yesterday I told you my Coinbase was hacked and $30,000 was stolen out, all altcoins. Luckily, it's not everything I have because I diversified where I was holding my coins. I have a ledger. I have several other exchanges. I have multiple places my coins are being held. But 30K is not a fun hit for anybody. But man, I'm so upset at seeing Graph rip the way it is because I'm happy for everybody else. But I had a big portion of that portfolio on Coinbase I had in the Graph. So seeing it rip 40% right after it was taken from me, not fun. But you know what? We're going to continue going. But if you were participating or you were DCA'd, if you were holding and positioned in IMX, Sand, Cosmos, I mean, so many altcoins have ripped hardcore, even the Graph, a bunch of the AI plays. So that's what we're going to be talking about today. Let us know if you're up or if you're down. If there's something you have your eye on, maybe we haven't watched, maybe we haven't taken a look at, but we are going to be pulling all of this information up here on stream. So let's go ahead and continue here. All righty. So first thing I wanted to start with is we always need to start with that 3 market cycles strategy that I talk about, the macro, the midterm, and the micro. And in addition to that, the caveat with that also is that if we're watching altcoins, the bellwether, sort of the governor of the space very regularly can be Bitcoin. So we need to pay attention about what's going on with Bitcoin. And we can see that, of course, this is RSI on the bottom, and this is a price action. And we can see once we break this massive downtrend on the RSI, once we break this massive downtrend resistance on the RSI, we tend to use it as support and bounce, bounce, bounce. And it looks like that may be in play of what's happening right now. And this would be very bullish. If we do get a little bit more of a pullback on Bitcoin, it would be even more bullish, finding support here on this RSI and then pushing up from here. Then that would be something that would be very, very strong for the bulls. Great argument, because that means not only do we break out of this massive downtrend line of resistance we've talked about every day on this stream this last week, we have this giant falling wedge, and this is broken out, and it's trying to roll over a bit. And if we find support on that and find support anywhere in this region, which it looks, look at this, it's also roughly just above the 50 line, which what do we say? When we have RSI, especially on these larger time frames, when we have RSI break above not only this downtrend resistance line, and this is any asset, this isn't just Bitcoin. When you have RSI in a larger time frame, over time being pushed down below, see here as this bear market, once we get down and we're holding down in this lower half of the RSI, this is also correlated to where we're at with weakness in the market and seeing a strong downtrend sort of persist over time. Once we break above this 50 line, get up here in the 60 region, fall down, find support on it, fall down, find support on it, fall down, and then once we break below it, where we're mostly trading below this 50 line, we also see this downtrend continue. So what we want right here is price to roll over, pull back a little more, or hold here for a little bit of time, you know, whether it be a week or two, so we can have authority with understanding that we're having healthy consolidation. If we're not pulling back, then another sort of correction, rather than actually pulling the price action pulling down, is called a time-based correction. And a time-based correction is when you get these moments like we have right here, where we already had this capitulation, but then we have this long period of accumulation and consolidation at these levels. And so what we want right here is, if we see this sort of rolled over and paused for a week or two, and then pushed up, and then paused at this region, and then pushed up and paused and broke down. So what we want here is for this to either continue for a little longer, or pull back a little more and have this supported somewhere, I would say above, if it does push past the 50 line on this RSI, somewhere above the 45, or not spending much time down there at all before rockets back up. The strength comes back into the market. So this is just something I wanted to point out here. Now, if we come to this next chart here, we can see the new address momentum. This is and I'm in the middle of filming the on-chain data analysis course right now for BitLab Academy, and we'll be going over, quite a few different charts, very relevant charts, to really break down what they are, how they're relevant, how to read them, and how to use them and utilize them in your trading strategy. And so with this right here, we got the new address momentum. And why is the new address momentum important? Well, let's think about it. One of the things that we do when we're looking at charts to find an entry is we tend to rely very heavily on technical analysis, the patterns, the support and resistance, the fibs, key levels, volume. Okay, this is technical analysis. But one of the things that you can do that can lead your technical analysis and indicate to you maybe you should be looking for something, whether it be a long or a short, an entry or an exit, is understanding the fundamental data that's available to you. That's looking at on-chain data analysis. That's looking at fundamental analysis of development and use case over time. And in this case, what we're reading here with the new address momentum, this on-chain data chart, is they're tracking how basically the speed at which and the quantity as well at which new wallet addresses are being formed. Now, some of them can be, for instance, say you're an individual and you buy 4 ledgers because you're trying to split up your stuff. Well, that's 4 new wallet addresses. So this isn't going to be specific to individual people, but it's still relevant because large in part when you're getting an exponential increase or a large measurable increase in new wallet addresses, that does also translate to new people coming into the market. So what we can see here, we have this moving average. And what do I always say when we pull up a chart? No matter how many times we look at any chart, we want to look at all the data available. So in this case, we have the Bitcoin price in black. We see in this sort of tannish taupe or tannish khaki pinkish color here is the new addresses, which is this is, you're seeing this is not smoothed out with the moving average. So this is why you see it very choppy like this. But then we see it smoothed out with the 30-day SMA, which is a simple moving average, not an exponential moving average. And this is the red line, which is the average of these. And then, of course, we have the 365-day or the yearly simple moving average. And this gives the blue line really gives us a very clear picture as to the trend in which new addresses are moving. In this case, through this whole period from these lows, we can see. My apologies. My knuckle keeps hitting this damn Stream Deck. So I'll edit that out for the replay for everybody. When we're looking at the new addresses, this is the key that we're seeing up here. We want to look at all the data that's available. We have the price, we have the new addresses, the 30-day simple moving average of these new addresses, which you can see this is very choppy. And then we have this being smoothed out here with the 30-day moving average. And then we also get the 365-day or the yearly moving average, which is this blue line, which really gives us a good defined sort of trend. Are we in an uptrend, new addresses coming in, or are we in a downtrend, new addresses, basically addresses being closed, new addresses not being formed, and such. And so we can see from these lows in this region here, I'm going to move that Stream Deck so my knuckle doesn't hit it. We can see right about where these lows are. This also is when we see a sharp increase on the 30-day moving average of a lot of new addresses being formed. So there are some smart decisions being made here, people coming into the market right here. But what do you notice right in this region right here? Look at this sharp increase in the 30-day moving average and the daily Bitcoin new addresses being formed into this. Now, that's excellent for having massive sort of increases in price, and you're getting the part of that. The fuel for those increases in price is something that we talk about called the hype cycle. When you start getting healthy movement to the upside and we start breaking previous all-time highs and we're getting very strong bullish momentum, what happens with that is then we start to get a lot of news media coverage. You start feeling, if say you made, 400% already because you bought at the bottom, you start talking about that with your friends, your family, and then those people talk to other people. Oh, my uncle, my cousin, my nephew, my son made all this. And then you start getting this hype cycle. You start getting people that have no idea what they're doing. And all of us, you and me, we've all been there. So we can't judge people for this, but that's why we're here. We're here to learn to buy in any asset asset class at these lows and take profit into the strength of these highs, okay? And so we're seeing this hype cycle play out as the new addresses pump into this huge sort of this market peak that we have right here. And this was a $19,000, $20,000 peak in 2017. But what we're seeing here, we're starting to see this round out. And when you look at the red line, the 30-day simple moving average, we can also see this sharp decrease right here when we had this crash. And then this has kind of been pulling back throughout this entire downtrend that we had in 2022. And then once we got to roughly about here, of course, this right here was the FTX crash. So this was the final nail in the coffin, hopefully, for the bears. We're hoping, and we're looking at the technicals, and we're looking at the charts to identify if this is this portion right here, this accumulation zone preparing for this next uptrend, which this, just so everybody knows, this is the same thing as this right here. This is the end of a bear market, accumulation into the start of a bull market. End of a bear market, into the accumulation, into a start of a bull market. That's what we're looking to identify right here. Excuse me. And we can see the new addresses are starting to come in. And similarly right here, we see this starting to come in. So we're seeing a correlation here. It broke through the yearly moving average, and the new addresses found some support, and they're pushing up. And it's this sort of thing that brings liquidity into the market. And what is liquidity? Well, liquidity is, think of it like if you have grass, in order for the grass to grow, you have to water it. New addresses bring new liquidity. Liquidity is money that is being injected, that's being invested, that's being put into this asset class. In this case, we're talking about Bitcoin. So new participants, if we see a sharp increase in new participants, they're bringing with them new money. So there's more water for the grass to grow in these markets. There's more water, there's more fuel, there's more liquidity in this asset for it to support upward movement. Now, the caveat with that is that we need to make sure it's not just new liquidity like we get over here near highs, because this is very weak new liquidity. This is new liquidity coming in, but they're people with no conviction because they're buying hype. Down here, people are buying near market lows, so even if they are new, they have some sort of sense of what's happening in the market, or they're lucky. But large in part, if people are buying after a huge yearly downtrend, they will tend to have a bit more conviction as to wanting to see upside price action. So this is giving that fuel, and now we need to have the bulls cool off a little bit here on Bitcoin and have that liquidity continue to come in, because just like King Peasant said here, we like money, baby. In order to make that money, scared money don't make no money, which means we have to buy when everybody else is fearful down in these lows. And then we need to be convicted on our asset. And as price opportunities come, we strengthen our position on that on pullbacks, and we don't get capitulated and fudded out of the market. We don't get shaken out by these market makers, because let's look at this. Let me pull up my chart. I'm going to come over here. Let's look at this. Oh, we're getting a bit of a pullback. Yes, we are. But if we look at yesterday, let's go to the 4 hour. Look at yesterday. Where was the pump yesterday? I believe it was, let's see, 7th. It would have been, yeah, it would have been right. Let's go to the 1 hour actually. I think it was right here. Yeah, so this is when Jerome Powell was speaking, and this started shooting up. And remember, for this to be up here, somebody bought down here or even lower, and then as the price pushed up, somebody took profits here. You know how I know somebody took profits here? Because the price came down. In order for the person to take profits here, somebody else had to be a sucker and buy the hope of this candle. They're buying the green. They're buying just, oh, it's going to rocket, so I have FOMO, I have to buy in, and then the market reverses to the downside. And then some of those same people, some of people like me years ago, then see it going the opposite way, and it's like, oh man, I better catch this short. And then, people short it. They don't short it here at the top because, they have to see the blood first, and then they're like, oh, it's going to break all the way down. And then the people are selling here because we see this wick. That means if somebody was able to buy here, somebody sold. So people are buying here, buying that hope, buying the FOMO, and then selling the fear, and they get wicked out both directions. They're being shaken about. That's why I don't trade on these decisions like coming out from the Fed, whether it's FOMC or Jerome Powell speaking or the State of the Union. I don't take those as trade signals. I have a plan in place ahead of that so I can be positioned with my stop losses in place if it does go the opposite direction. But you have to make these calculated moves. You have to make these calculated decisions and do it consistently over time and adapt your strategy when you're not winning. Okay? So we're seeing the market shaking about, and I was calling for the last several days, for a bit of a market pullback, and I'm hoping still that we do get a pullback. Let's go ahead and move this down. I'm going to go to the 4-hour here. I'm hoping that we get at least down to this 22.6 level, but in reality, I really want to get down to be ultimately bullish, to break these lows and test anywhere in this region, anywhere from 21,000 all the way up to 21.4. Really test that the bulls are going to come in near this downward price previous resistance, which, as we see on this, if we do auto here, we see this is a major resistance line that we need to find support on. But getting back to what we were talking about, we are seeing the new addresses coming in. That's giving us fuel here, which is a very good sign. And I wanted to show you this right here. Just a couple more charts before we jump in to talk about the altcoins. If we come to MVRV Z-score, this is a market value to realized value. If we're basically very, very overvalued, or down here, very undervalued, specifically when the price action is below the realized price, meaning the realized price is the average of every coin in circulation, the average of the last time it was sold, bought or sold, so transacted in any way. So when price action, the actual price, is below that average realized price, then we get down here in this green zone. When we have several standard deviations above that realized price, that's when we see these overheated marks, and has marked the top of every one of these peaks here on the Bitcoin bull cycles. So we have been in this region for quite a few days here, all the way from around June 2022 all the way through January 2023. And we've been in this period similar. This is very reminiscent of what's going on here in 2019. And we're pushing out, but look at this. Even pushing out, we can see that I'm trying to put my mouse here, but this flag, you see this goes up and then comes down and tests it. We've gone up. It would make sense on-chain data as well as looking at the price for that to come down and test. And that would really be proof of the move that we're really looking for. But we are in a bottom region either way. So even if we break below 21,000, I'm DCAing in at every lower target, 19.6. 18.5. I'm hoping 19.6 is the lowest it goes, but I'm prepared otherwise. Now, reserve risk, we can see. Look at this. Now, let's go ahead and read what this is. Reserve risk is defined as the price divided by the HODL bank. And the reason why I love this chart is because what was I just talking about a second ago? What I was just talking about was when we were looking at the new addresses, we were talking about people coming into the market at different levels, having different stages, different amounts of conviction. What we want in this market is people that are buyers with conviction, especially to form a market low. To form a bottom, we can actually see this more clearly on the, do I have the R? Yeah. R HODL, the RODL, I'm not sure how you want to say it, but the realized HODL ratio. This is a perfect exemplification of this. This is a measurement of a ratio between strong conviction holders and weak conviction holders. And how do I know that? Because it is a measurement. It is a measurement looking here on the RODL, the RHODL, the realized HODL ratio. It's a ratio between people with conviction, aka long-term holders, who are statistically much less likely to sell. They're much less likely to be shaken out. And especially at the bottom, this is how we get this floor. We get this floor because there's now people that have conviction. They're not willing to sell on price movement, these little shakeouts. At the top, where we see this orange line that's coming all the way to the top, this is when we have a disproportionate number of short-term holders in the market, when we have people that are weak hands in the market. So when you have a disproportionate number of people with these are weak-handed people, then when we start getting price action crashing, the long-term holders The long-term holders, the reason why this is high is because the majority, a good portion of them have sold into the strength of this bull run. So as they're selling, as they sell into the strength, this comes up to the top. And as they sell, now those coins are being bought by short-term holders, people with less conviction, and we get weakness to the upside. Now, the reason we get this fuel to the upside is the reason we get this fuel to the upside is because this goes back to this right here, having new holders come into the market. We get this right here. We get this massive. We can see this directly on the chart. We can see new addresses. We could break this down looking specifically at this. So this is 0 days. Let's put this on 14 days, get it smoothed out. But you see this giant spike right here. This is new liquidity coming in. So there's a lot of hype people willing to give profits to people that were smarter. And I don't want you to do that. You're not going to give your money away to somebody else. And that's what you do when you buy on emotion and you buy on FOMO, because you're not looking at the data. Okay, we want to sell into this portion right here. It doesn't matter if you don't get the top. It matters that you take profits into the strength of a bull run, and then you line up your buys into the weakness of the bear market. And this goes directly back to this chart right here. You hype buyers here at market cycle tops, okay? And smart money accumulation here at the bottoms when everybody else is fearful. And how do we know this? It's because we come back over here. We come back over to the where is it at? The R hodl. Here. How do we know this? How do we know this is this was a bottom? Because there's no more short-term holders to sell. The ratio is such that there's more. The ratio is in favor of the people with conviction buying. Look at this. Look how deep this went right here. Similar right here. This attempted pullback. Everybody's fearful. Now we're seeing this. This already established into this sort of DCA zone all the way back here in. When it was also at 22,000, 20,000 in August 17th. But then, of course, we had another, I don't want to call it a black swan, but a frustrating experience with just very poor business management with FTX and Sam Bankman-Fried, and we get this drop down for a period of time into the 16s, and this went deeper into this R hodl band, and now we're back basically at parity right as we were before the FTX scandal. So we're looking for these signals. We're looking for these data points in fundamental analysis, quantitative analysis, on-chain data analysis, so it can signal us ahead of time to say, look, we're getting a disproportionate amount of people with conviction. Is it a bottom? I'm not entirely sure. But looking at the R hodl bands, looking at the NVRV Z-score, we're looking at realized profit and loss ratio, looking at these various things. And I go over all this in very extreme detail here in BitLab Academy. So definitely make sure to come check this out. All these updates are coming out. The prices will be going up for BitLab Academy after we do these updates. But anybody that's in before we make do the updates, will have their current price. This lower price will be honored for the lifetime of their account. So you'll be saving money by getting in now, right before we get all those. And also, I mentioned this yesterday, but also we do have a coupon code right now that you can use, and it's relaunch 15. So you can use this for 15% off courses, courses and indicators, whatever. Just put that in at checkout. But talking more here, we're trying to identify through all of our fundamental quantitative on-chain analysis, as well as knowing what's going on with the development of our asset, to then see looks like a situation's brewing. Now let me look at the charts to identify, coming in here to the weekly or the 4-hour, and seeing where I can identify my trade entry. Are there bullish divergences setting this up also? Has it already been a small pump? I need to find a pullback, and then I can find my entry with confidence. We're using a combination of all of our skills and data points that are available to you. Many of these things for free. Of course, I was just looking at Glassnode, but you can come over here to look into bitcoin.com. Come here to charts. This is a free website. You click on charts. Here, I can click on MVI. We have all these different charts. This is a free site. And if you get confused as to if you really just want to double check what it is, what it's trying to show, scroll down. It's got a great sort of definitions and ideas about how it can be used. So I want to encourage all of you. I want to encourage you to use the best tool that you have, and that's your curiosity. That's your ambition. That's your actions in investigating and looking into and strengthening your education in this space so that you can dominate this market, because this market is an absolute battlefield. There's nobody that feels sorry for you. We can all have compassion for you, but on the charts, somebody's buying and they don't care if you're losing $100,000 when they buy that. They don't care if you're being liquidated. You need to be prepared in these markets to fight a battle. And the only way you can be prepared, your weapons in this battle within the markets, is your education and is your knowledge. So it doesn't matter if you are in BitLab Academy or not, use the tool of curiosity and ambition and your drive to go and investigate these things. Come tune into me daily. I'm trying to share as much stuff as I can here. So shout out to everybody who's here. Again, if you haven't yet, hit that like button, hit that subscribe button, ding that bell. I appreciate all of you so much. We're going to continue on here. And of course, go there and go to that website if you have not yet and follow those socials. So jumping back in here, let's go ahead and start looking at some of those altcoins and everything, because the last thing I want to show you before we do that, though, is if you're unfamiliar, if you're currently very unfamiliar with on-chain, or you just want a quick look, you can also come here to colintalkscrypto.com/CBBI, or you can Google search Colin Talks Crypto CBBI. This is the Crypto Bull Run Index. And what this does, this aggregates Pi Cycle, the net unrealized profit and loss, the R HODL, what I just showed you, the Puel multiple, which is a miners on chain, the profitability of miners, 2-year moving average, the Trololo trend line, MVRVZ score, reserve risk, top cap, and coin value days. It aggregates all this and creates one simple chart that you can see based on all the data from all these charts. Are we near a bottom, which would be these lows, as we can see right here, or are we very overheated? We can also see it on a color map on the chart itself. So definitely check out this if you haven't yet. And currently we are sitting at a 14 read, which is basically, you can see this is a measurement here. We're way down here. So what are we talking about today? We're talking about how we could position ourselves best to have consistent profits in the market. And right now, Bitcoin and the altcoin markets both have had a recent pump that's been quite nice to see. It's been welcome relief after this just ridiculous 2022. We had the best month on record, second best month on record in January for Bitcoin price increases. So let's go ahead and look at how we can navigate this, because Bitcoin has been pumping, and we have to remember that that markets move, liquidity moves between different asset classes. So when Bitcoin is pumping, we're gonna come over here. We're gonna look at BTC.D. I think I have it up here. BTC.D, which is the Bitcoin dominance. We're gonna come over here to the daily. This was just an example of the shakeouts that happen so regularly in Bitcoin. I'm going to turn off our BitLab Trading Suite just so we can see the price action here. And look at this sort of range that we've been trading in. Now, for anybody that's new here, what I do like to do, I like to utilize quick keys, and I navigate TradingView very easily. And with that, I do want to say, make sure you come over here. If you haven't yet, come over here to BitLab Academy, to the YouTube page here at BitLab Academy, youtube.com/@BitLab Academy. Come to the playlist, or live, I mean, and you can see a lot of the early videos I have, or here on playlists. Come down, view full playlist. I've got this Pro Trading View guide. Definitely watch it. It's 12 minutes. Really shows you how to really dominate your charts and use them the most effectively. And I've got a bunch of other really great videos here for any very early in your journey newcomers to the crypto or trading world. So what we're doing here, I'm going to do option. Anytime I say option, if you're on the PC, the same thing would be alt. So option H for a horizontal line, but I don't like these because they make my chart dirty. So I'm going to do option J, which does a horizontal ray from this point over. Now I'm going to do the same thing here, option J. We've got a bit of a range that we're trading in here. Now, what we're seeing with the dominance and why this is important is because we're looking at the relationship between Bitcoin and altcoins. Now, when we come back over here to, and I found a new site, so I'm going to show that to you. Coin Paprika. I actually like this, I think, more than CoinGecko and CoinMarketCap. But we can see where is... So, here it is. So right here on the top right, sorry, I got lost there because on CoinMarketCap and CoinGecko, it's all in different places. Bitcoin dominance is 38.96%. What does this mean? Well, the total market cap of all coins that this data aggregator is pulling is, so basically the entire crypto market minus probably some obscure coins that aren't listed, and if they're not listed, they probably shouldn't be. The total market cap right now is $1.135 trillion, okay? Now, 38.96% of that is Bitcoin. That's what this dominance is relevant to. So 38.9% of $1.1 trillion. And we can see that relative right here because the market cap of Bitcoin is $441 billion. Okay, so what we're trying to do here is catch those movements between Bitcoin and altcoins. And when Bitcoin dominance is basically on an uptick and it's going up, that means the liquidity in the entire crypto ecosystem is going to Bitcoin and not as much so to altcoins. There might be an altcoin that's ripping here and there, but large in part, on aggregate, in general, the altcoins are not moving as much as Bitcoin. In this case right now, we're seeing, if we look at the Bitcoin dominance chart, we see, look, what do we see right here? Well, we have a W formation. Okay, now I want to always bring this back to this chart right here because this is critical. A W formation or accumulation, multiple sideways action, but W formation, which is also known as a double bottom. Okay, where did my chart go? Double bottom. We have this double bottom right here. Boom, boom. Now we have a push up. Okay. We have a retrace, we have a push up, and we have this retrace. But this is what I'm paying attention to right here. If I press shift and click on my screen, drag my cursor down, and then click again, we have a 3.95% drop in the dominance. This doesn't have to do with the price. This is the dominance as it relates to the entire altcoin market. So if this is being pulled back, then you have to assume we can look over here. We can go to, do I have it at the bottom somewhere? I do not. So we're going to add it. So right here on my list, I'm going to type total 2. Oh, do I already have it in there? Looking. Oh, there it is. So this is excluding Bitcoin, okay? So this is the altcoins. This is Ethereum and every other altcoin, every crypto that's not Bitcoin. And we see this has been pushing to the upside. And this makes sense because we look at, when we're looking at, let's go back to Coin Paprika. We can go to 24 hours. Look at this. We got Hex, Sandbox, Near Protocol, Axie Infinity, Flow, Basic Attention. I mean, look at these ripping, okay? Now, when we were looking, let's actually even look at this, the 7-day. Singularity, AI play, the graph, the Amazon of blockchains, indexing all the data on blockchains so people can pull information, build APIs to integrate with all. This is, okay. Then we have Render Token, which is decentralized graphics processing. Then we have Optimism, another layer 2, really, really great protocol, smart contracts as well. I mean, I love Optimism as well. I have not allocated into this one yet, but you can only allocate so much at any given time. But this is on my list. Casper, Algorand. We're having a lot of really great resurgence here in the altcoins, and we see this playing out on this graph right here. On this chart, we see the total market cap, excluding Bitcoin. We're seeing this rip up. But what am I also seeing? What I'm seeing right now is this, and this is the crux of what I wanted to talk about today, and that is that maybe, and I'm not saying you should do this, but there's a consideration that has to be made. At what point do you take profits? If you're buying something for a long-term play, know your time horizon and stick to it. That's fine. But if you are actively trading, then and you're trying not to buy something and then incur a 20% drop or whatever sort of losses on it, and you're actually like actively day trading or scalping or trying to make those plays early in this bull run, then what I'm seeing right here is, if we zoom in on this, what is this formation? Now I'm going to do option, which is same thing as alt, option T, and hold on, option T. That gives me a trend line. So we go like that, option T, and I'm just doing this just for a general sort of. And what is this? What does this form? If we do this on candle bodies, we'll do it on the wicks there. This is forming an ascending, basically an ascending wedge. Okay, this is an ascending wedge, which is inherently bearish price. This is a inherently bearish chart structure is what I'm trying to for. It's not price, because this is the total market cap excluding Bitcoin. That's why I was tripping myself up trying to say price. But we saw a parabolic run up here, a lot of momentum, okay? And now we're seeing a momentum wane, and it's trying to the upside, and each time getting less momentum to the upside. That's why this is inherently bearish. This is pointing to the upside. It's still going up, but it's bearish because everything that you want to do in trading is all tied to understanding what the momentum in the market is, what the psychology of the market is. And by looking at these graphs, looking at these charts, you can read the psychology of the market because you're seeing a lot of momentum coming in. Now, the bears tried to take it, and there's still momentum. The bears tried to take it, and each time there's less and less momentum, meaning there's less fuel for the bears being shown on the chart here. And so at some point, we might get another push up, maybe even out, but this is the most common. Sort of theme I see in crypto is, even with the bearish structure, you get a bullish breakout to trap people, and then you come down and break down to the downside. And in this case, what we would do here is option T at the widest part. We come over here, and this would be, the target would be somewhere in this region down here, which is, if this were to break out up here, I'm saying this would be, we do shift click, come down. This would be a 7% drop on the total market cap. So what you have to understand here, that this 7% drop on the total market cap for altcoins doesn't mean all altcoins are going to drop 7%. No, it means that Ethereum will drop a certain percent, and then each step you get lower on this ranking. If you come over here to rank and you put it in order, this is ranked by size of market cap. That's where this rank comes from. How much liquidity, how much money is in each one of these assets. The price is irrelevant. You want to pay attention to the market caps, okay? I'm going to drill that through your heads. And as the further down you go, the more likely, the further down we go, the more likely that you'll get a larger drop in price, because there's less conviction in that asset class. It's not going to ring true 100% of the time, but when Bitcoin drops 5%, a lot of times you'll see, if Bitcoin drops 5% in the matter of a few hours, you are going to see a lot of altcoins drop dramatically more than that 5%, because there's less liquidity and they're a higher risk asset. The further you are down this list, this coin market cap, this market cap ranking, the further down you are on this list, the more risk of an asset the more risk is in that asset. So you want to take note of that. Now, when we're looking at what's going on with the actual coins, now we can jump in and we're going to look at Sandbox, we'll look at Atom, we'll look at GRT, and there's a couple other of the ones that you all were shouting out here. Let's see, boom. Just throw in the chat. I'm going to try and get to several of them. Throw in the chat some of the coins that have been ripping. Don't put something that's up 4% in the last week. Actually put some of the ones that have been ripping. But we're going to go ahead and jump here on the charts, and we will start with Sand, because I don't think we've done Sand yet. We're gonna come here. We're gonna go SAND. Now we'll use Binance. Now we're gonna go to auto. We'll go to the weekly. Alrighty, so this is setting up to be very bearish potentially if there's a bearishness in the market, because we got a shoulder here, large head. If this rolls over, this would be a very scary setup. This is the first thing I'm seeing just looking at this initially, but we got a zone here. I'm going to go ahead and let me Let me go ahead and change the color of this. We're going to go boom, background color. There we go. All right. So we've got a little bit of a zone here. We're going to drag this across there. Now we're going to do option J. Option J at this level. And I'm just going to do these most local targets, option J. And you see how this resistance also is right where we found support right here. Now we're in this resistance zone. Now if we do option F and we get our fib, I'm going to do option F, not directly on the line so I can use it. Now coming to here, look at that, right at the top of this zone of resistance that we are pushing into. Right at the top of this is where we have this golden pocket. So there's a lot of resistance right here. So this is starting to roll over. We have strong momentum coming into this, and this is looking at sand here on Binance. I'm looking just at the weekly first, and we're finding resistance right below the golden pocket, which is also, we could see this was a low right here. And look at that. We found resistance right on that low. This also had support, resistance. Now, if we zoom in on this down to the 4 hour, now it makes sense when we're looking, when you start on the macro first, the larger cycle, then when you zoom in, you understand what all the support and resistance lines are on your chart because you just looked at it on a wider scale. So when we're over here, now we can see what I want to do here is I want to do option F from the bottom here, or Alt F if you're on a PC, drag up, get my Fibonacci. And so I'm looking for this. We have a golden pocket here. This has a very high hit rate of price pulling back to it on any asset, and especially on crypto. So what I see here is that there's a lot of, look at this channel right here. If I pull up the, if I just drag this in that zone there, look at, this is a golden pocket. Look at how much price action is there. Now, if I pull up the VPVR, here we are. Now I'm going to double click on the VPVR. I'm going to go to inputs. I'm going to turn this to 200 and you'll see these large blocks turn into much better resolution. And we see, look at this high volume node also as well. It's a point of control, a lot of price action. There's a lot of support right here. So I would be looking for a play for this to come back, and I'd be looking for an entry around the 58-cent mark, anywhere in this region, especially because we're seeing on the total two, we're seeing the setup for a bearish sort of pullback on altcoins because of this bearish setup on the entire altcoin market. As well, in addition to that, if we go back to the Bitcoin dominance, we can see that what's happening here, we formed a trend. This is a breakout above this level, so it's a breakout. Look at this perfect retest. This is why you want to look for confirmations of a move. This is a breakout. Oh, I missed it. No. Actually, you're being conservative and smart, and now you see the bullish confirmation of this breakout with dominance, and this moves back to the upside. So this is a confirmed move to the upside. So what I'm seeing here, even though this is rolling over, when we put this into context of looking at the total two, and you saw that was in a bearish structure, and this has already formed a bullish trend, and now this had a stiff, strong momentum to the downside that is now starting to wane. I'm looking for a bounce somewhere in this region, maybe as low as this. I don't think it'll go that low, but some sort of rollover at this point for another push to the upside. And if that were to be the case, and total two, the altcoin market were to roll over out of that bearish structure, and we see that this is at resistance right here. You see how I'm painting a picture of the likelihood of what's happening in the market. We're painting a picture based on the other dynamics of other assets and how the liquidity is moving between all of these assets so that we can position ourselves accordingly. So yeah, I'm looking for at least a retest back here at the 73-cent level. But if we do get a strong pullback on the total two and the big push in the Bitcoin dominance, all these things will work together. And I'm going to be setting some levels in this region here between the 57 and 59 cents, anywhere in this region. But I would ladder in also somewhere around the 73-cent mark because The market is very exuberant right now. They're looking for bullishness. So we might have some things break structure. We might have things just rocket to the moon. And that's why you want to ladder your entries. So now I saw a bunch of different coins here. I think we looked at Atom yesterday. So I'm going to look at some other ones first. If we get to Atom, we will. Looking at Gala. So we're going to come here on the weekly. Okay, boom, boom, boom. We got a massive option T, massive trend line here. Okay, we broke out of that clearly. So option J, we got a level. We have a level on. This is more of a zone right here. Why is it a zone? It's a zone because we have lows right near each other in two different places. So I'm putting a sort of zone in that right there. And similarly, we have a kind of another zone here, but we're looking more locally right now. So I'm going to double click on this. What? That's 200. Okay, there we go. So now if we do option F, pull down, let's get our fib. We pushed right into the 786. Now we do option F from this candle here, the bottom of the that move, and push this up. We're looking for a 4.5 cent pullback, probably minimum. This is also confluent with this level right here. We can see. So this is where you find confluence, not just a fib, but a fib that is on previous price action resistance or support. So we're getting that sort of information. Now, what we see right here is we're sitting on this volume shelf, and once we break below this fib here, where's hold on a second. Yeah. So yeah, this is finding support on the golden pocket. After we pushed up here, we found resistance on the 786. Now we're finding support right here in the golden pocket for this move. So now what I'm looking for, because the market is sort of rolling over, I'd be looking for these targets down here at the 4.5 cent mark. And then if we break down further, definitely the 3.4 cent mark. So 0.034 on Gala. So now let's we got Flux. I saw a lot of people talking about Flux the other day. I don't really follow Flux that much, but it is a play in the market. There's a lot of community around it. So we're gonna mark this out. We're on the weekly. Just gonna do that, just like that, just like that. Now what we're going to do here is I'm going to do the fib from the top because this is a weekly, and I'm going to go all the way to the bottom. And look at that. We found resistance right in the, you see how often these golden pockets play out? If you're wondering why price is pausing, take a moment, zoom out, do a fib. We found resistance right here on the golden pocket, rejected out of it. Now we're sitting on this high volume node right here, which is kind of no man's land, but let's go ahead and do a move from option F, from the bottom of this move to the top of this move. And we can see that we found support on the 382, which is also above this price action here on this volume shelf. So let's go down to the 4 hour and sort of get more clarity as to what's happening. You see how I'm using the larger time frames and then getting more resolution on the candles by zooming into the smaller time frames? This is how you do effective TA. So let's go ahead and zoom here. I'm going to do auto. Now look at this. We're trapped in this range between this moves 382 and the larger moves golden pocket. There's a dip in the volume right here though. So if we do fall, we do have some reason to break this 382 because it's kind of just sitting on the top of this price action, but it's just a peak. This is where the grouping of the price action is on this level, and it's right below where this 382 is. So if this pulls back, I'm looking for 79 cents. If it breaks down below that, then down here at the 6.6 to 6.9 cents, and this would be a really great opportunity on this position for Flux if this were to come back here. Again, none of this is financial advice. I'm walking you through my strategy on how I'm looking to identify trade opportunities, trade targets, and what's going on. Now, this has established an uptrend with this proof of the move here, test back, proof of the move, but I am looking for a bit of that pullback. On a smaller note, right here, as I said, in that 8.5 cent level, but really more so in this zone just below it, like right here, and then another zone right in here. So yeah, that's what I'm looking at for Flux. Now, what else we got? let's do Matic, because Matic, as much as it was kind of ripping the other day, or earlier in this run, it is still performing. Look at how this is performing. I'm going to go to the daily, 3-day auto. Now, okay, zoom. Okay, so what we're going to do, Option J. I like to get my map on the chart. So I'm going to do Option, no. There's a zone here. It's kind of undefined, but there's a zone there. Now I'm going to do Option F from this peak here all the way to the bottom. And I'm also going to do one all the way from this, Option F. This one will be more important. Look at this. Golden pocket on this move is sitting in the 382 from the macro move, and it's being trapped right in this zone. We're getting higher lows, but I am looking for a pullback on this. This has been ripping. Now, barring any sort of major adoption news in terms of partnerships or anything like that, this is showing a lot of strength, but we're on the 3-day. So now let's come and look at the strength in resolution on a 4-hour. And so you see with this, I haven't used any indicators for this other than the Fibonacci, volume, and price action. So this is something I want you guys to, everybody here, to master this. So then when you add on the indicators, and we have an incredible indicator pack with BitLab Academy, but if you master the price action and use that in combination with the indicators, nobody can stop you in this market, because you can read the momentum yourself in price action, but see the signals giving you indication that there's something to look for. And then you can use the combination of looking at the price action, the candlestick formations. You know, right here we have a shooting star that was indicating that we're going to break down. So the second we broke below this level and continue down, that's a clear entry. But now the thing with this, we're talking about bearish structures. I can see this just immediately as we looked at this chart. Option T, we've got an ascending wedge on this as well. Okay, so this is a bearish structure, and look what we're doing: momentum down, less momentum. It's barely getting new highs, and the lows are creeping up, but this is tightening. This is tightening, which means the momentum is tightening, and the conviction of the bulls in this move is starting to wane. So what happens at this point? The bulls get exhausted, and the bears will start to roll over. This may come down here and then rebound back up, but I am looking for, just like I said on the other coins, a likely sort of fake out to the upside if we do get that, or just a straight breakdown from here. But what we want to do is let's look at a very local level on this 4-hour time frame. Let's go for Option F. Let's get a fib from there. And look at this. The 382 is right here at the previous lows right here. So if we do pull back, we can also do Option T, see if there's any confluence here. Let's go. Let's say it broke out here. That would kind of go into this no man's land, which would be right on the top of this peak here. If it breaks out a little bit higher, that's just in this 382 zone. So what I'm looking for with this, regardless of if we get a bounce and we get a fake out to the upside, then down, or we just break down from here, I'm looking for these volume nodes that we're having right here on the VPVR or the VRVP, depending on which one you're looking at, same thing. And looking at the confluence of this Fibonacci's with price action. So I'm looking at, if we get back down to the dollar range, $7, $8, yeah, that is a heavy DCA zone for me. I had the hiccups. That's a heavy DCA zone for me, but I'm also going to be laddering in at some of these levels along the way. Okay, so that's how I'm looking at Matic. Now, before we go, why don't we just pull up the indicators with this and see how they're relating what's going on here. All right, look how great the BitLab Market Intelligence. Look at this, calling every one of these tops with the divergences. Boom, 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 and there's also boom calling the lows on each one of these. Now, what we want to look for here is this is overheated. Even though this is rolling back, this is still overheated with the pullback. So that is showing the proof of the bearish move. We're getting overheated as it's pulling back. This is not part of the BitLab indicator system, but I do like it. This is RVGI, the Relative Volatility Index, and this is rolling over right here as well. We can see this at each one of these rolling over and each one of these had a large pullback. This is already crossed. It's starting to roll over. Now look at the relative extrema, sticking very far out of the cloud into that move, very far out of the cloud, suggesting that this move was likely not a confident move and would likely roll over. We get it at the top here. We get a hanging man, which looks like a hammer candle, but it's at the top, and it basically knocks the floor out of knocks the ceiling out, and then we get immediately following that a shooting star, where we have, which is basically an inverted hammer at the top of a trend. And we see these two combined suggest, just those two alone, without looking at any indicator, suggested that this was going to roll over. So I'd be looking for an entry anytime that we break below this and get any sort of get any sort of hesitation, pull back up, confirmation to the downside. That's what I'm looking at. That's what I'm seeing. I hope you're all doing well. I hope you are taking, if you've learned anything in today's lesson or any of the streams that I've done here on BitLab Academy, put in your favorite emoji in there, put in your favorite altcoin, list some of the altcoins you want me to do on some of the future streams. I'm trying to get more and more coins on here that we can do and show the strategies combined with talking about them and what the targets are. How are we finding those targets? What is our process? What is our plan? Because if we don't have a plan, if we don't have patience, then we can't, and we don't deserve profits. We need to have a plan. We need to have the ability to adapt with new market conditions, new market data. And we need to have the willingness to go and look for that data, not only on the charts, but also using some of those on-chain things. Tuning in here to me, tuning into BitBoy, tuning into Frankie Candles, tuning in to Investing Bros, tuning into Crypto Capital Venture, tuning into Crypto Banter, whoever it is. Get a broad range of information from a number of different people. And yeah, I really appreciate you all being here. Hit that like button, hit that subscribe button, ding that bell. Again, let me know. Put in a hashtag sticking point. Comment below if you're watching this on one of the future streams. If you're watching anywhere else, make sure you come to bitlabacademy.com and make sure you come over here and follow the actual BitLab Academy YouTube page, which is here, youtube.com/@BitLab Academy, or you can see right here. Come check us out. It's every day, 10:30 a.m. Eastern Standard Time. I really appreciate you all. I hope you're learning from me. I hope I can learn from you. Share your thoughts here in the live chat, also below. Any sticking points you might have, anything shorter. I'm trying to do some shorter videos on the weekend that are 8 to 12 minutes. So let me know if there's a specific lesson or strategy that you're wanting more from. Comment here or below, and we'll read through all those and try to get those on the docket so we can give you what you want and what you need, because we're trying to bridge that gap from beginner to pro. And with that, my name is Kelly Kellum. Thank you for being here, a part of the community here in BitLab Academy. Shout out to everybody, all my mods in chat. Shout out to everybody who's here. Hope you have a wonderful day, and I'll see you very soon. Adios, muchachos. Thank you for watching. Thank you for tuning in, my friend. Adios, muchachos. Thank you for watching. Thank you for tuning in, my friend. Adios, muchachos. Thank you for watching. Thank you for tuning in again.